Welcome back to Trading 360. I'm Nicole Pendolides. Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Aquiles Larrea, CEO of Larrea Wealth Management. Thank you so much for being here. The markets are at new highs this week. You also, congratulations, have a new book coming out, Wise Up with Your Money by Aquiles Larrea. People, I guess, can begin to look for that soon. Tell me some big pictures about maybe the book, what it's about, and your thoughts on the market.
Yeah, absolutely. The book has some great points about my investment experience for the last 30 plus years, talking about what has worked, what are the points that don't work, when it's time to get out of a stock, and when it's time to pick up a stock. Similar to the stocks we're going to talk about today. We're going to have some turnaround targets.
All right, so that's good to know. I mean, you're going to be talking about Boeing in a moment. We are at record highs, but a name like Boeing is down in 1 month, is down about 23% with all that's been going on. A lot of the traders that come on, they say they don't want to touch it because they think that more headlines could come out and it could fall even further. You disagree?
Yeah, absolutely. Boeing's one of those companies that proves us wrong again and again. When the first crashes occurred with the 737 MAX, we didn't have enough information. Traders didn't have enough information to do their trading. I was calling it at $76, and it went from 76 to $200+. I see a similar opportunity here, Nicole, where you can pick up this stock for under 200 right now, and the sky is the limit because there's no fundamental problem with this company. If we find out that it's human error, if we find out it's something else, then yeah, I understand. It would fall into my parameters for why we would sell the stock. But it hasn't met those parameters, Nicole.
Yeah, and so just a couple of things. The FAA has now decided to halt production ramp up of 737 MAX 9 jets. We also had Bank of America moving Boeing to a neutral from a buy and cutting that target to 225 from 255, still upside from here. Ben, your thoughts, please, on the charts.
Yeah, Nicole, this is a stock that's coming under pressure here, and really I can understand the idea of things being overdone to the downside, but until we see key levels that have been established on the way down taken out on the way up, at this point we're still in a trend environment to the lower. Let's take a look here first and foremost at a 30-minute candle chart, and you can see some areas of migration where value has done just that, established itself at lower and lower levels. You can see stock came off here just a couple weeks ago. We were trading up around 235 down to 197, and you can see that we tried to get a little bit of a lift off that 197 level, but we started to roll back over here again. So I just kind of took out a fat crayon with this one. 30-minute candle chart, we're looking at three areas of consolidation. I forgot about this small little area around 218 where we kind of held, which was actually significant because you could see this topping pattern that we made, unable to take that out. So again, footprints, the path that the market leaves us here right now has established a bit of a trend environment to the downside. And again, not what the bulls want to see aside from the fundamental narrative playing out here. Just taking a look here, adding a little bit of time on, you can see a similar pattern here. But I wanted to take a look here, going further back here at just a couple of these areas that have formed here, again, on the way down, because the market has established here a few areas for us to look at. 265, 246, 230, 218. Basically what I'm seeing is we're currently bouncing around 208. Nicole, as long as we hold below 218, one could even argue as long as we hold below 230, we're still in a bit of a bearish pattern. Boeing's still under pressure, unfortunately. It's not just the fundamentals, the technicals. There's supportive of a bearish narrative. And again, yes, things are going to get a bit overdone at some point here, but trend is still lower right now.
Okay. Anything you want to add to that before we get to Apple?
Yeah, I mean, we're going to see, obviously, a lot of resistance at this point. But once again, we don't have enough information. Let's get that information. Let's get that investigation done. And let's use this as an opportunity to accumulate the stock.
All right. I saw some headlines today about how Apple was doing abroad, and Apple's iMessage is doing well. The outshines Huawei in China as the iPhone emerges victorious despite local competition and government ban. I'm not sure anybody necessarily expected that. And so even though shipments to China fell 2.1% according to the IDC, it is some good news for them that they're outshining Huawei. It's at 195 today. Where do you think it's headed?
Well, we're thinking easily, we're not looking at a 36% move to the upside that we saw last year, but we still believe that we can get good double-digit numbers with this stock. It is kind of secretly trending into markets it hasn't done well before. They're also shoring up the Indian connection in terms of not just relying on China and Taiwan for the semiconductor chips and the like. So we see that happening, and at the same time, we think within the next 18 months, we should see a decent 20 plus points on this stock, simply because the whole story is not AI, it's not solutions that they've had in the past. It's the new solutions that are coming out, Nicole. I think that this is an incredible stock to own, has always been, and people underestimate it when there's nothing going on.
Okay. What do you think about this chart, looking at the technicals then?
Now that we've got Boeing out of the way, we're all on the same page here, that's for sure. Apple definitely in a trend environment to the upside. The technicals very much supportive of what we're seeing in terms of the fundamentals. Let's dive right into it. A very well-defined, we're talking bottom left corner to top right corner depiction. We're going back just to last week here. When we were trading around, 180, 185, you could see high conviction move to the upside and then sideways consolidation. Now, this is a 5-minute candle chart, but you're going to see this pattern repeat itself across multiple time frames as we look at shares of Apple here and discuss what we've seen. Taking a look here, just first and foremost at the more granular look, get out a real fine-tooth comb here. You can see these areas that have been established to the upside, balancing around 194. Consolidation, acceptance, as long as we hold above 192. I think that's still very much a valid approach towards trading. And this is a 5-minute candle chart. Look at this. Almost an identical depiction here as we step back. We've got daily candles now, so we've gone way back, all the way to the beginning of last year. High conviction again to the upside and sideways consolidation. I love when it stacks up like this because it really is supportive of the bullish narrative. And let's just show some of the areas that my eye was drawn to along the way up, and similarly to that 5-minute candle chart, right? Areas where the market kind of pauses, regain composure, oftentimes tests the prior area but holds. You can see most of the conviction was on the left side of the screen into May. Since then, we've been more sideways than not, holding above 185 on the daily candle chart. As long as we're above 174, though, similar situation as that 5-minute, very much bullish. One more step back here. And again, look at this, almost an identical pattern, right? We've gone from a 5 to a daily and now to a daily candle chart, but going not only back to last year, but this goes all the way back to 2018, the summer of. And I'm going to just identify some of these areas of consolidation that my eye was drawn to here so you can see a few of them. Most notable currently around this larger area, I established 185, holding above 155, multiple time frames here supportive of the bullish narrative. You got a 5-minute, we've got the daily going back to the beginning of last year, this time last year, and taking a look here at this longer term chart, you're going all the way back to 2018. I mean, I see exactly what Aquiles is talking about. He's pointing to the fundamentals, I'm pointing to the technicals though, yeah, but very much in line here.
That's good that they're working together. It's also worth noting that we had Goldman Sachs keep a conviction buy rating on this name, though lowering the target to 223 from 227. As I said, it's at 195 today, but Goldman Sachs keeping it on the conviction buy list. Should we move on and talk about Goldman Sachs?
Absolutely.
Well, you know what? Before I do that, let me ask you this. Of the Magnificent Seven, do you like most of the names, or is Apple sort of the standout?
Apple will always be the standout as being one of the leaders of the 7, but at the same time, people are looking for a ridiculous rate of return on Apple all the time. We have to maintain realistic expectations of the stock, and we also have to make sure that in those realistic expectations, we're going to make some money. So compared to the others, no, it's not the same. But absolutely, positively, lots of return to be expected there, and that will continue, Nicole.
Yeah, how about the Apple headsets, those $3,500 headsets over this past weekend, and the pre-orders just blowing out expectations. Let's get to Goldman Sachs. Your thoughts?
Yeah, Goldman Sachs is a turnaround target, as are most of the regional banks. We're seeing a lot of downward pressure, a lot of consolidation in the industry has already occurred, but Goldman Sachs is a company that's going to first benefit for when that turnaround occurs. So we're going to make sure we're going to have that as part of our portfolio. We're accumulating it, not on a big basis, but we're accumulating it. We're looking for 6 to 12% in an 18-month time frame. We like its leader position in the division, in the sector. We think, along with Morgan Stanley, however, we have more conviction with Goldman Sachs that this stock could easily meet those numbers, that return on investment, in a very short time period.
Yeah, so you still think Goldman Sachs is definitely a leader in the financials. Right now it's up 1% at 383, Ben. Your thoughts on the fundamentals here, the technicals, looking at the technicals on the chart?
Yeah, technicals feed right into that, Nicole. Very similar pattern in terms of what we were just talking about a minute ago. High conviction of the upside, consolidation. When you see that playing out in the form that it has here, to the extent that it has in Goldman, it is very bullish. Let's take a look. And I just want to begin with, again, your eyes should be drawn to the two phases of development. They're easily identifiable on this chart. You get higher highs and higher lows where the market is actually seeking value. That's a high conviction phase, which transitions into a kind of low conviction phase, right? Or just more sideways, rotational. But the beauty of it is that there's only two phases of development, and oftentimes very easily identifiable, that transition from one to the other. Definitely in this instance, we've got a 15-minute candle chart here. We're looking at shares of Goldman, and you can see how after that big run-up that we saw, consolidation has been occurring here, and this is around the 382 level. Again, very easily identifiable on this chart here, and just kind of looking at price activity through this lens really helps provide a lot of simplicity. Let's take a step back, because you're going to see this repeat itself over and over again. Bullish, bearish, we're talking stocks, futures, options. I mean, it's just it's a robust way of viewing price activity. Here we've got a 1-hour candle chart here, Nicole. We've added some time on. We're going all the way back to October, and similar pattern, right? Wash, rinse, repeat. You've got a vertical, horizontal, easily identifiable transition between the two. This is the move we just looked at. You can see, again, balancing around this 380, 382 area. The way I see it, as long as we hold above 347, we are still trending higher, again, on a 1-hour candle chart. Let's take a look at the daily candle chart here, because remember that 5-minute, 15-minute candle chart? It was a very similar pattern, right? High conviction of the upside on the left side of the screen and sideways. And look, this is playing out in a very similar fashion. We're going all the way back to the spring of 2020. Let me just add a couple areas that my eye was drawn to on, again, a daily candle chart. And it looks to me like, in this instance, 350 is what we're looking at. Well-defined lower extremes to establish this range. Very well-defined upper extreme around 426. But in this instance, everything above 200, very much random, very limited in terms of conviction until we take out these upper and lower extremes, but still very much supportive of a trend environment to the upside across multiple time frames here. I like this one as well, Aquiles. Nicole?
All right, thank you for that, Ben Lichtenstein. Final thoughts here, Aquiles.
Yeah, you know, it's always darkest before the dawn, and some stocks are ripe for a turnaround. We want to make sure that we're part of these stocks that are getting beat up, and at the same time benefiting from them on the upside. It's not just about the 18, 20 points you make in a day. It's about the 18, 20% you can make in a year if you're good.
And be patient. Understood. Aquiles Larrea of Larrea Wealth Management, and Ben Lichtenstein there on the charts.